Discover timeless investment wisdom, unlocking financial success through The Intelligent Investor by Benjamin Graham. Benjamin Graham's The Intelligent Investor is a timeless classic in the world of investing. This book, which was first published in 1949, is still very relevant today since it emphasizes a disciplined and logical approach to investment. Numerous investors, including some of the most successful ones like Warren Buffett, have benefited from its advice and tactics. Key concepts. Graham presents the idea of value investing, which entails purchasing stocks that are cheap in relation to their inherent value. He counsels investors to pay more attention to a company's long-term fundamentals than to cyclical swings in the market. Margin of safety. According to this theory, stocks should be purchased when their price is far less than their inherent value. The margin of safety serves as a buffer against losses brought on by unanticipated market declines or poor decision-making. Graham compares it to the manic-depressive figure Mr. Market, who makes daily proposals to purchase or sell stocks. Mr. Market fluctuates in mood, giving low prices at times when he is dejected and joyful. Rather from being signs for investors to follow at face value, Mr. Market's offerings should be viewed as opportunities. Investing and speculating are two different things. Graham makes this distinction. An investor concentrates on the in-depth examination of a company's financial standing, whereas speculators frequently make choices based on feelings or recent market movements. Risks associated with emotional investment. Graham cautions about the perils of following the herd and emotional investment. He highlights how crucial it is to remain sensible and disciplined even in the face of sharp swings in market mood. Graham emphasizes the value of conducting in-depth research prior to purchasing any securities. Making educated investment decisions is aided by examining a company's financial statements, earnings history, debt levels, and management caliber. Investment strategies. Defensive versus enterprising investors. Graham divides investors into two groups: those who are willing to put in more work and are able to consider a wider range of investments, such as special situation or inexpensive stocks, and those who are enterprising, who aims to reduce risk through a diversified portfolio of well-established companies. Graham is a promoter of diversification as a risk reduction technique. Investors can lessen the negative effects of a single investment's bad performance on their whole portfolio by distributing their assets over a number of sectors and asset classes. Dollar cost averaging. In this approach, a certain sum of money is invested on a regular basis, independent of changes in the market. This will eventually result in a lower average cost per share since investors will be able to purchase more shares during periods of low price and fewer shares during periods of high price. Investing versus speculating. Graham highlights the value of making decisions on investments based on solid research as opposed to speculating on transient price changes. Companies with strong fundamentals and a track record of reliable performance should be sought after by investors. Conclusion. The Intelligent Investor is essentially a manual for investors, providing timeless insight and a structure for making logical, well-informed choices in the stock market. Value investing, the margin of safety, and the significance of disciplined, long-term strategies, three of Graham's core ideas, remain essential cornerstones for investors seeking long-term success in the volatile world of finance. The lessons in the book urge investors, in spite of the volatility of the market, to concentrate on intrinsic value, practice patience, and keep a level head. This synopsis only scratches the surface of Benjamin Graham's insightful book The Intelligent Investor. The ongoing significance of the book can be attributed to its core concepts, which have shaped the strategies and thinking of successful investors globally.